Welcome back to Passive Income Agent. This is Charlie Cameron, and in this video, we're going to talk about a stock market retirement for real estate agents. So, a passive income agent stock market retirement or stock market investing is the first profit center of passive income of our four. Now, it's the first one because it's the most passive way to have an income later in life. Now, I want to make this clear. If you're trying to retire early, it's going to be really difficult to do that with the stock market. However, if you want to have a really nice traditional retirement and have it be very painless at the end of your working years, the stock market is probably the way to go. It is going to be the most passive on the tail end, as well as the most passive to build up along the way. Now, it's going to require quite a bit of cash to invest along the way, but if you do it correctly, you're only going to need to invest personally about a quarter of what you want to have later, because that's the power of compound interest. It's going to keep growing and growing and growing and building up that nest egg for you. So I want to jump right in. What I'm going to do is I'm going to use examples to go through this and numbers, because it's really the easiest way to do it. And if you want to follow along, you can hop on over to the blog post associated with this in the link below. And you can use some of the links I have in there to online calculators to help you kind of figure this out for your own numbers. Now, stock market investing is the most traditional way that Americans retire, usually through a 401k or an IRA of some sort. So what I want to do now is I want to just walk through, by example, how to achieve a real estate agent stock market retirement by working backwards. So what do I mean by working backwards? What I mean is you have to establish your goal, your income goal, and then work backwards from there. From there, you got to figure out, when do you want to retire? How far are you from that? What do you need to be invested in? How much have you invested? All those things will tell you how much you need to be contributing today on a monthly basis in order to achieve that retirement monthly income. Make sense? Okay, so the first thing you need to do is establish your retirement income goal. So that's choosing how much annual income you want to have in retirement, or if it's easier, think about it in monthly income terms, right? All you need to really do is sum the kinds of expenses you'll expect you might have and add a buffer and some funds in there, because we don't want to just be sitting on a park bench feeding the pigeons, right? Consider whether you'll still have expenses like a mortgage or a car payment, and then come up with your goal. Right, so let's say for our examples, we're going to use a goal of $75,000 a year in retirement. And that's pretty good. I'd venture to say that's more than most Americans have in their retirement. But I think it's a good goal to have, especially if you've done things like paid off your mortgage. You'll have quite a bit of money to play with each month to go visit the grandkids, to travel the world, whatever it may be. You should have fun in your retirement. That's why you worked for however many years, right? So that you could have fun, not just sit on the park bench. So 75K a year, or $6,250 a month. That's going to be our goal that we work with. Now, just a note that if you expect to have some pension or other income, you can subtract that from that goal amount to make the stock market piece of it smaller. However, just be careful. Like, for example, I don't ever include Social Security in my math because it is talked about quite often. Hey, should we get rid of Social Security, right? At some point, I could just not have Social Security. So I don't want to depend on something I may not have. I'd rather have icing on the cake later. So enough on that. The next thing you need to do after you've established your retirement income goal is determine how long until you want to retire. So that's going to be one part of it is, how old are you, right? And at what age do you want to retire? The average American retires between age 62 and 64. We're going to choose slightly earlier so that we have a little more time to enjoy our retirement. We're going to choose age 60. And what I'm going to do is I'm going to assume that you're 27 years old. So that gives us 33 years until retirement. So time is on your side to leverage compound interest, which is a really good thing. Plus, if you plan on an early retirement, then if something goes wrong along the way, or you can't contribute for a few years, or your income is lower for a little bit, this allows you a few year buffer to catch up if you need to on the back end. So I'd always plan on hitting a goal earlier, and that way you have even more, more conservative numbers along the way. So the next thing we need to do after determining how long until you want to retire is how much have you saved. That should be pretty simple. You go into your retirement accounts and you look at how much you have. Let's say that you've saved 75 grand, right? That's our income goal. Let's say you've also saved and invested that much towards retirement by this point as well. Now, financial advisors will recommend different things for how much you should save. However, those don't tell you how much you'll have in retirement, and it'll usually be much less than your current income if you follow those rules. So that's why I like to do it this way, by working backwards. That way I know I can achieve the goals I want at the end. But you got to do what's best for you. The next thing you do after you figure out how much have you saved is how much do you actually need in your retirement nest egg. So financial advisors generally recommend the 4% rule, meaning whatever you have saved up by retirement, you can safely use 4%, and it should last you through retirement 30 plus years. But because of inflation and a number of other factors, advisors are now starting to say that that amount should be lower. So to be conservative, we'll use 3% for our math. So what that means is, in order to have $75,000 a year in retirement, we'll just divide $75,000 by 3%. That comes out to $2.5 million. So you'd need a $2.5 million nest egg when you start your real estate agent retirement in order to have $75,000 a year. But I don't want that number to scare you. There are ways to increase your income as an agent, and you can use time to your advantage to get compounding returns to build this up. You're not going to put $2.5 million away. That's not what I'm saying. You're going to put a fraction of that away, and it's going to grow. Okay, so now we use an investment calculator, simple investment calculator, to determine how much to save monthly. We're going to use 6% as our expected annual stock market return over time. Now I know this isn't how the stock market works. However, this is the only way to plan, right? 6% is a pretty conservative estimate that helps account for variations in the stock market as well as inflation. If you're invested in the right funds, 6% can be a good estimate, a conservative estimate. If you happen to earn more along the way, good for you, right? Now you're making even more each month in retirement. So now we'll use an investment calculator, and I linked to one in the article below. And what we'll do is we'll enter the amount saved, $75,000. That's how much we've already saved for retirement. We'll enter our current age, 27. We'll enter the age we want to retire at, 60. We'll enter 6% as our expected annual return. And then we'll play around now with the monthly contribution until the estimated retirement savings amount equals our desired goal of $2.5 million. So if we play around with that, what we end up getting is about $1,600 a month, $1,600 a month. Now that sounds like a lot of money, but by these calculations, using these numbers, if we saved $1,600 a month from age 27 to age 60, noting that we already saved $75,000, we'd be able to retire at age 60 conservatively and still be able to withdraw $75,000 a year in retirement. That's a pretty big deal. Now, if this is too difficult to save, or if you think you're behind the power curve, you can stay tuned in. If you want to run these numbers yourself, again, click below, click on that link, go check it out, see what it comes out to for you. And then if you want to, pause this video and come back to it here in a second if it seems like too big of a number. What I'm going to do now is go into one step you have to do to make sure that your investment savings are actually being invested properly. And the other thing I'm going to do is talk about ways to boost your retirement income and retire even earlier. All right, you ready for this fun part? Okay. This step's important. Listen up. Just because you're contributing money to an IRA or a 401k, IRA for real estate agents, because we generally don't have 401ks, or putting it into an investment account doesn't mean it's being invested properly. If it's just going into a savings account or a money market account, it's not making much interest at all, and you're not going to be able to achieve this. Your money has to actually be invested in something. And I wouldn't recommend, I'm not a financial advisor, disclaimer there, but I wouldn't recommend buying individual stocks. You should buy stock market funds. And specifically for retirement, target date funds are awesome because they basically change your risk level. They're invested in a lot of stocks all at once early on, And as you near retirement, it moves out of stocks and more into bonds so that your risk gets way lower. Your returns get lower then, but that's when you want your risk to be lower because you plan to use that money. Early on, you want your risk to be higher so that your returns are higher. So you have to actually make sure your money is actually being invested. You can do that yourself, or you can hire an advisor with whichever investment company you're investing with to do that for you. Okay, let's talk about ways to boost your retirement income and retire early. At Passive Income Agent, we talk about three different other profit centers of passive income, three different additional revenue streams you can use to increase your revenue and retire early. As well as you can earn more commission. So depending on what brokerage you're at, you might be earning 50% commission. It's 2020. There's no need for that. Right now, you could just simply hang your license with eXp Realty and earn 80% to 100% commission. And I'll link to that article below as well. You can read that for yourself, decide if that's right for you. Ask us if you have questions. We'd be happy to show you the model. But seriously, nobody really needs to be paying 50% commission anymore if you're doing most of the work. You can also leverage things like revenue share, which is one of our profit centers of passive income, where you can make additional income each year just by showing other real estate agents a really good model they may want to come to. Right? For every capping agent you directly bring, you could make an extra $2,800 a year potentially. So if you did that 6 times, you get your entire cap back at eXp Realty. So there's quite a big perk there. Just one of the perks of eXp Realty that you could consider. And you can hop on over and try a revenue share calculator out as well if that's something you're interested in. Should also look at, as a real estate agent, you should absolutely look at real estate investing. Please, please, please don't just work for investors. Consider investing yourself. It's a huge way to generate monthly cash flow month after month after month with kind of pretty low risk depending on what you invest in and how you invest. And you can learn more about real estate investing over at passiveincomeagent.com as well. And then team building. You can go ahead and build your own agent team. Now, why would you do that? That doesn't sound very passive, right? Well, it's not when you build it, but it can be once you've grown it and you've put systems and people and processes in place to handle a lot of the crazy, difficult work for you. And you can just take on the leadership and support role, helping agents find the support they need, which can be a mostly passive effort if you do it right. You can learn more about that as well. I'll put a bunch of links in the description below. I hope you've enjoyed this video. If you have questions about a real estate agent, stock market, retirement, or anything else I talked about, hit us up at facebook.com/passiveincomeagent or passiveincomeagent.com. Hit the little messenger in there and chat with us.